Welcome to Cat Eye U.S. stock. We watch markets with calm focus and sharp instinct. It's Wednesday, January 28th, 2026. The S&P 500 nudged past 7,000 again today. On paper, that's a milestone you'd celebrate. But underneath, the market traded like it wasn't totally sure it believed its own headlines. The Fed delivered the pause everyone expected on rates. No hike, no cut, no shock. Here's the catch. The statement stayed steady, but it didn't really offer a roadmap for when cuts might start, and the more divided tone from Fed officials made the central bank feel less predictable. Not more. So bulls got the pause they wanted, but they didn't get conviction. Big tech and AI heavyweights kept the scoreboard looking strong, yet the broader tape told a different story. Narrow leadership, cautious positioning, and a rally that's suddenly being questioned. Not chased. Pull up the S&P 500 Heatmap, and the story gets clearer. This wasn't a sea of bright green. It was mostly muted tiles, dark grays, soft reds, just scattered pockets of strength. Roughly more names were red than green. Not a crash, just tired breath. Semiconductors were the loud exception. Micron lit up in bright green. Nvidia, AMD, Intel, Texas Instruments, Analog Devices. That whole chip cluster leaned positive. A few networking and infrastructure names, like Arista and Cisco, glowed on the upside too. But defensives told the other side. Big pharma and biotech screens were streaked with red. Consumer staples, the Walmarts, Costco's, Cokes, Pepsis, Procter's, leaned lower. A lot of consumer discretionary and chunks of industrials and aerospace sat in the red as well. From a distance, the index looked calm. Up close, the heat map showed a market quietly selling the broad middle to keep funding a very specific set of AI and chip winners. That heat map backdrop sets up the real story. Money flow. Today was about rotation, not out of stocks, out of comfort. Capital kept piling into AI-levered semiconductors and select tech infrastructure. Micron already doubled in 2 months, tacked on another big gain. Options were buzzing around it. Peers like Intel, Nvidia, AMD, Texas Instruments, and Analog Devices stayed well bid. Networking and infrastructure plays, like Arista and Cisco, rode the same AI infrastructure wave. So where did that money come from? Classic defensives and some consumer exposure. Big pharma and biotech names, outside of Johnson & Johnson, were under pressure. Crowded obesity and specialty pharma trades saw de-risking, staples and utilities. The bond proxy corners of the market were sold because the Fed's pause, without a cut timeline, made hiding there a lot less compelling. Industrials and parts of financials traded heavy. Small caps lagged again, a hint that late-cycle worries are being expressed by moving up the quality curve into cash-generative growth, not by doubling down on broad cyclicals. Put it all together, and today felt less like a victory lap and more like a nervous standoff. The S&P 500 flirted with that 7,000 mark again. The Nasdaq kept its winning streak alive. On the scoreboard, it looked like a strong day. But the internals told a more tentative story. Breadth was weak. Leadership was narrow. The Dow barely moved. Small caps slipped. Cyclicals and banks were soft. The Fed, meanwhile, paused without promising when cuts might actually arrive. And a more split read on the committee made policy feel less predictable, just as markets sit at record levels. Underneath, traders acted like they knew that. Positioning stayed tight around megacap earnings. high multiple software, and the more speculative AI stories saw profit-taking. And away from equities, precious metals quietly pushed higher. Silver spiked, gold climbed, as if investors were buying a little insurance against the very risks the stock market didn't want to say out loud yet. Geopolitical tension, uneven earnings, and a central bank that's clearly in wait-and-see mode.
Around the street, speculation kept circling three big threads. First, options desks were buzzing about AI. Micron has doubled in just 2 months and jumped again today. Flow showed big call buying, but also chunky protective puts. Some traders called it momentum chasing. Others said it looked more like hedging a now-core AI memory bet. Nvidia saw brisk call demand around the 185 to 195 range, tied to hopes for China and open AI demand, even with regulatory noise still in the background. Second, Oracle became a talking point for the wrong reasons. The stock's been sliding, and credit default swap chatter picked up. Commentary started asking whether its aggressive AI data center spending is turning into a balance sheet risk. Balls pushed back, arguing the pullback looks more technical than fundamental. And third, macro desks leaned into a new phrase, a pause on cuts. The Fed held steady, but the tone cooled near-term easing hopes. That read through fed into quiet trimming of bond proxy sectors and a tilt toward cash-generative growth over the more speculative ends of the risk spectrum. SpaceX is launching rockets and maybe launching an IPO. Today, TechCrunch reports SpaceX is getting ready for the public markets, with secondary trading already on fire. Major Wall Street banks are said to be lining up, while private investors rush to buy shares before any official filing. That kind of demand usually signals something big is coming, and this isn't happening in a slowdown. In the same 48-hour window, SpaceX is flying twice. On January 28th, a Falcon 9 launched 25 Starlink satellites from California. Tomorrow, another Falcon 9 sends 29 more into orbit from Florida. Meanwhile, Starship Flight 12 is already stacking in Texas. So the question is, does going public fuel SpaceX's next leap or change everything? Follow for real market and space stories that actually matter. Micron sat front and center in today's AI trade. The stock has already doubled over the last 2 months, and it tapped on roughly another 6% today on heavy volume. Options flow was intense, big blocks of calls, but also sizable protective puts. On desks, that mix sounded like both momentum chasing and risk management around what's becoming a core AI memory bellwether. Micron's move didn't happen in isolation. It helped pull the entire chip complex higher, from Intel and AMD to Texas Instruments and Analog Devices. For investors who want high beta AI exposure, Micron has become one of the cleanest ways to make that bet, but that also makes it one of the most crowded trades on the board. Nvidia kept acting like the emotional center of the AI trade. Shares climbed roughly 1.5%, holding near the 190 area. Options traders stayed active, with brisk call, buying clustered between the 185 and 195 strikes. Chatter linked that demand to optimism about AI chip sales into China and to OpenAI, even with regulatory questions still hanging in the background. What really mattered for the broader tape was that Nvidia just kept grinding higher on Fed day. No euphoric spike, no breakdown, just steady strength. As long as Nvidia's chart looks like that, it helps anchor confidence in the whole AI hardware complex, from GPUs and accelerators to the networking names riding the same wave. Microsoft spent most of the regular session in a holding pattern, The stock traded relatively flat, even as implied volatility stayed elevated ahead of its after-hours earnings. Traders knew this was one of the single most important prints for both AI and the major indices. Microsoft now sits at the heart of the AI narrative. Through Azure, through its OpenAI partnership, through how quickly AI features turn into real revenue. So the lack of a big move into the close wasn't apathy, it was tension. Positioning stayed conservative. Few wanted to be meaningfully underweight. But at these index levels, few were eager to chase it aggressively before seeing the guidance. Meta spent the day inching lower, but the real story sat on the other side of the close, with shares hovering just under 670. Traders were basically on pause, waiting for after-hours earnings to update three things: how aggressively Meta keeps spending on AI infrastructure, how much that spending is actually improving engagement and ad revenue, and whether Reality Labs keeps burning cash or finally shows some discipline. Meta now sits at a crossroads in the AI conversation. It's a massive buyer of AI hardware, and it's a major platform trying to monetize AI-driven experiences. Whichever way this report breaks, the reaction won't just matter for Meta. It will feed into how sustainable investors think the current AI infrastructure boom really is, for chips and for the hyperscalers. Oracle went the other way today, and people noticed. The stock fell a little over 1%, and it's been pulling back for weeks. Behind the scenes, credit risk chatter picked up, with more focus on its credit default swaps and a string of cautious headlines. At the center of the debate is Oracle's AI story. The company's laid out an aggressive data center build to chase AI demand. But some desks are starting to ask whether that CapEx push is bumping up against balance sheet risk. Bulls argue the recent weakness is more technical than fundamental. Still, Oracle's underperformance versus the broader tech complex highlights a growing divide. Markets are rewarding AI names with clean balance sheets and clear cash returns, and they're getting more skeptical of stories that need heavy leverage just to keep up in the arms race. Johnson & Johnson stood out precisely because almost everything around it was red. While Big Pharma and much of biotech traded lower, J&J gained roughly 1.5%. Investors leaned into its strong fourth-quarter momentum, upbeat 2026 guidance, and constructive commentary around its oncology franchise, including expanded multiple myeloma indications. In a sector seeing de-risking in crowded obesity and specialty pharma names, J&J is being treated less like a generic defensive and more like an earnings-visible safe haven. That idiosyncratic strength underscored a bigger theme in this tape. Investors are getting more selective. They're willing to pay for clear cash flows and pipeline visibility, and they're far less interested in owning every healthcare story just because it's labeled defensive. So where does that leave the market heading into tomorrow? We've got a Fed that paused, but basically put cuts on hold until the data really justify them. That pause without a roadmap keeps policy uncertainty higher, just as the S&P sits near record territory. In the very near term, the focus shifts to how futures digest tonight's numbers from Microsoft, Meta, and Tesla. Their guidance on AI, on spending, and on margins will help decide whether this AI-centric rally broadens out or finally takes a breather. Right behind that comes macro. Over the next week and a half, labor and eyes readings from JOLTS and ADP to jobless claims and the full jobs report will give the Fed new cover either to talk more confidently about easing or to lean back toward higher for longer, with indexes pinned near highs, breadth thin, and implied volatility elevated around these events. The setup is simple, but not comfortable. The market wants to keep records in sight, but it's waiting for earnings and data to prove this rally still has the legs to keep running.
We close tonight with a market that looks strong in the headlines, but feels hesitant underneath. The S&P 500 tagged 7,000 again. The Nasdaq stayed resilient, yet the Dow barely budged, and small caps slipped, a reminder that only a few sectors are really carrying the load. The Fed delivered a pause, but with no clear roadmap to cuts, and a more divided tone policy feels less predictable than it did a month ago. AI and semiconductors are still running the story. Defensives, cyclicals, and a lot of smaller names are being asked to step aside. From here, the tape is waiting on megacap earnings to confirm the growth narrative, waiting on the next wave of labor and ISM data to clarify the Fed's path. Until then, this is a rally that wants to run, but isn't quite sure it should. Thank you for watching Cat Eye U.S. Stock. Stay curious, stay calm, and we'll see you next time.